Do you trade in crypto but don't know how to calculate how much tax you owe to the Australian Tax Office? Well, if you don't, today I'm going to teach you exactly how, step by step. How's it going, guys? Ryan here and welcome back to another crypto video, and today we are talking about how you actually calculate the tax that you owe to the Australian Tax Office on your cryptocurrency trades and investments. But before we get into that, guys, please remember to give this video a thumbs up. It helps me out so much with the YouTube algorithm, and subscribe for more crypto, stock market and wealth management style content. If you do enjoy it, please remember to leave your thoughts down in the comments section below as well. I'd love to know your feedback on today's video if you did find it useful. So without further ado, guys, let's get straight into today's video. Now, before I start, I did a really in-depth video on the Australian tax rules when it comes to cryptocurrency. I'll leave a link for that down in the description. I highly recommend you check that out before watching this video, as it will give you a good basis and understanding for exactly how all this fits in. But today we're actually talking about the steps, the calculations you need to make in order to calculate the appropriate amount of tax that you owe the Australian Tax Office at tax time when it comes to cryptocurrency fitting within your total income. Cryptocurrency itself is treated as an asset, and effectively therefore CGT or capital gains tax is what is applied. So there are various ways to do this, but I'm going to show you the most basic and simplest way of determining how much money you owe the tax office in 4 simple steps with these calculations that I've put together for you today. So let's run through them now. So step number 1, you have to calculate your capital gain in the first place. So your capital gain is effectively calculated by working out what your purchase value of the relevant coin is. So for instance, if it was Bitcoin, how much money did you pay to acquire those Bitcoin, minus the sold value. So the value at which you sold that Bitcoin at a later time. Obviously, if you sold it for less, then you don't owe tax on it. It's only when you are making money. So if you sold it for more, that is a situation where you have made a capital gain and effectively own tax on it. So the calculation is capital gains equal your purchase value minus your sold value. Step number 2, and this is only if it is applicable, calculate your capital gains discount. So if you're not already aware, a capital gain discount applies if you hold an asset in excess of 12 months and then sell it for a profit. And effectively that discount is at a rate of 50%. So basically you're halving the amount of tax you pay on the profit that you've made. And effectively the calculation for that is your discounted capital gains rate equals capital gains times 50%. So I've calculated it and broken it down more simply. DCG equals CG times 50% or 0.5, and effectively that means you only owe half of the capital gains for the amount that was held in excess of 12 months when you sell it. Step number 3, add your total taxable income to this calculation. So effectively what we're trying to work here is your total net capital gain, and that obviously includes the capital gain, the discounted capital gain, plus the taxable income that you've received from what other forms of income you have. That may be through, your full-time job, it may be under rental yield, whatever it may be, the total taxable income needs to be included here. Now, please note as well, when we've got the capital gain and the discounted capital gain, we've split it apart. So for instance, if you had $10,000 and half of that was held for more than, 12 months, effectively then that green capital gain is going to go down to $5,000, and the discounted capital gain is then going to be calculated based on the additional $5,000 that was there, and it would actually work out to be $2,500. I'll get more into that later when I show you a legitimate example of how this all works. But effectively, all you need to do for your net capital gain is get your capital gain, add it to the discounted capital gain, and add in your taxable income as well. Very straightforward. And this is where we now get into the meat of it. Step number 4, calculate the tax that is owed. So the calculation for this is your tax owed is your net capital gain times the tax rate. And obviously we've got different tax brackets in Australia, and in the example I show later on, I'll show you how those tax rates and those tax brackets are actually applied in a real world scenario. But effectively you're applying the tax rate to your net capital gain, and therefore that is the amount of money then you owe on tax. Alright, so let's look at a legitimate example. I've kept the colors the same so that you can effectively follow the steps once again all the way through and work out what fits where. So let's say you start off step 1. How do we calculate our capital gain? Well, let's say in the first year you've purchased $10,000 worth of cryptocurrency. And effectively what you've done is in that year you've sold it for $20,000. And effectively that means you've made a profit or a capital gain of $10,000, which is fantastic. You've effectively doubled your money. Now, let's say for instance in step 2, half of that money that you made was in coins that you had held prior for longer than 12 months period. So let's say that amount is $5,000 worth of those coins. It's literally half of the coins you held for in excess of 12 months, the other half you didn't. So that half effectively means you can apply the CGT discount to that $5,000 worth of coins that you have sold, which you held in excess of 12 months. So the DCG effectively equals the $5,000 times 50%, which is 0.5, and that effectively gives us a discounted capital gain of $2,500. So effectively what we've done is taken $2,500 out of this entire equation, and it's not being taxed at all. So then effectively we need to work out our net capital gain, and our net capital gain is the CGT, the capital gain that was not included in that original calculation, plus the discounted capital gain, so the $2,500, which gives us obviously $7,500, which is taxable, plus our total income. So let's say for example we're earning $100,000 a year. Therefore our total net capital gain for the year is $107,500. Then we can finally work out the tax that is owed, and it's effectively that total net capital gain times by the tax rate. But how do we calculate the tax rate? Well, let's look at that now. Now, typically what we see is the tax brackets in Australia relatively fluctuating on a regular basis. So basically the tax rate that would apply in the current financial year, we're currently in 2021, would be the $45,001 to the $120,000 tax bracket, as we made a $107,500 capital gain this year. And effectively that means it's a flat rate of $5,092 plus 32.5 cents for each dollar over 45,000. So let's look at how we actually calculate that. Taking us back to our example, effectively what we do is we obviously take that 5,092, as that's just the flat rate for our bracket there, but then we need to work out the delta that is going to be charged at 32.5 cents to the dollar. And the way in which we do that is effectively get the NCG minus the $45,000 off the front end and times it by the 32.5 cents. Then once we've worked out how much that is worth, we add it to the $5,092 initially, and that gives us a total amount of tax owed for this financial year of $25,400. $405.50. Effectively, in the most basic sense, that is all there is to it. Now, obviously, if you go back and watch my other video where I talked about crypto tax, that's linked in the description, you'll understand that there is a lot of record keeping that needs to occur so you can effectively prove that this is the capital gain that you are going to be taxed on, because otherwise the ATO is going to be on your back straight away if you haven't calculated the right amount of money. So make sure you are keeping your records, and I highly recommend once again going and watching that previous video as we talk about all the different key elements and different factors that apply in those sort of scenarios. That wraps up today's video, guys. I hope you did enjoy it. Please remember to subscribe if you want to see more of this type of content. We talk stock market, crypto, wealth management, all that sort of really cool stuff. And if you did enjoy, please remember to also give the video a thumbs up. I'd love to know your thoughts in the comments section below on the current setup for cryptocurrency. If you found this video straightforward and helpful, please leave a comment, let me know, recommend it to your friends and that sort of thing. But with that, guys, I hope you have an awesome day. I'll see you next time. Cheers.